Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Friday, March 25th, 2022. Next week, the last week of March, again, approaching the end of the first quarter. So, again, expect some weird price action potentially into next week. Today, maybe you could make a case for that. In fact, maybe over the last week, you could make a case for that with the massive surge in stocks that we have seen. Today, the S&P 500 moving another 0.5% higher. However, the NASDAQ 100 on the other side was actually fractionally lower. Both had big surges just into the close. This is the 10-minute chart on the QQQ. You can see it was trading just a little off the lows of the day with about 30 minutes to go. Then staged a remarkable push up, maybe some short covering into the weekend, who really knows, but ultimately a nice push, and again, closing down about 50 cents on the day, or just 0.1%. Now, counter that with the S&P 500, which had a beautiful close here, just off the highs of the day here, kind of a pseudo double top, and again, closing up about 0.5%. Now, a couple things I want to point out on the intraday chart. Number one, a very, very choppy session. So today was a day where you had some rumors out there, some chop. Ultimately, the market's just kind of chopping throughout the course of the day. By the end, as we said, slightly positive S&P, NASDAQ again, basically flat to negative. Now, on the trend line side, I think it's worth it pointing out this trend line. If you connect this low to this low yesterday, the low of today perfectly tags it. And then look, late in the day, we revisited that level. In addition, remember this trend line that I talked about in yesterday's video, again, goes back literally weeks here. And sure enough, what happened today? Right down to that level, and that happened to be the low of the day. So going into next week, I want you guys to watch this level. All right, now this upsloping one is obviously important in the near term, but this one has a trend line that stretches back such a significant amount of time that you do want to watch this one. This one would be the bigger break point on the overall market. If you get below that one next week, I think you see a bigger sell-off to the downside, potentially revisiting this gap fill all the way down here, which again, listen, it's not that far. It's about 8.5 points lower on the spiders. That's about, I guess that's almost 2%, so it's not a bad sell-off there. But again, just something to keep an eye on. Watch it closely, this low pivot to the downside here. Okay? All right. Aside from that, again, markets staying relatively resilient. Markets continuing to look at the Fed and say, hey, listen, they're talking a tough game, but the market, honestly, I don't know if they're believing the Fed is going to have follow-through, and that's kind of where I'm sitting too. I've said this to you guys, is that I think they're talking a big game, but, I think at this point you have to think that they're already doing things that are slowing the economy down. If you look at the 10-year today, I mean, this is remarkable, folks. The 10-year got above 2.5%. The high of the day, 2.503. Again, there is a long-term trend line. I'll show it to you guys on the 10-year yield chart when we bring that up, that you actually officially tagged. I think yields are going to start to pull back. Now, you might say, well, isn't that bullish for stocks? Well, not if it's associated with a weaker economy. Is that why yields are pulling back? Because the economy is starting to look weaker? That's my guess, and I think that's going to be bearish for the stock market. All right? So again, we'll continue to kind of follow that. Quickly just taking a look at the Russell today. The Russell, which has been lagging, you could arguably say kind of, lagged the S&P again today, although it did beat the NASDAQ. So again, you can see again closing just off this high pivot. In fact, just out of intrigue here, you could actually connect a trend line right through here. Look at that. Let me get that as exact as possible. But here's your pivot high. You touched it here, you touched it here, and you touched it there on the intraday 10-minute chart. Again, I still think that this chart generally is lagging, which to me is a warning sign. And again, just go back to prior to the last week or so, the massive rally that we saw, and I was making comments to you guys about the Russell being significantly stronger than the NASDAQ and the S&P 500. In fact, we can even look at that chart here in just 1 second. All right, so let's bring it up. Let's start out with the Russell, in fact. So you can see here, if we look, and let me get rid of these trend lines here, and we can even get rid of this one for now. But basically, you're in a position where you saw the Russell coming off of this double bottom, rallying up, and then coming back down here and not retesting or even getting that close to that low pivot right down there. So again, that was something that piqued my interest, because if you then flipped over to the NASDAQ 100 chart, you could see that we went right down to that same low pivot. All right, here was that previous one. You actually went lower. You actually made a slightly lower low. All right, but again, the Russell was signaling something there, and before you knew it, I mean, look at this move up in the QQQ. Today, again, a beautiful little pause day. If you go to the S&P 500 chart, it didn't quite get down that low, but it got down to the previous low right here, and then obviously off to the races. So where the heck is the S&P's next resistance? Let's take a look here. And this has actually been kind of tricky, because I've been doing a lot of number crunching here to see when this market's going to start to resume its downward momentum. And I do have a little bit of a level I want to show you guys here. So if you take this high right here and you connect it right through there, you have just above that level that we got today. However, you're coming up to this area. This is your next spot. So it would not shock me if we could get up just a little bit more, maybe around 457 or so, 456 and a half. That would be a major level. Now, as I explained to you guys, I am looking to short the S&P 500. I have held back at this point, smartly enough, but nonetheless, it is getting in that range. So I would say if we get one more push up where we get kind of to that 456, 457 level, let me straighten that line out there just a little bit. But if we get back to that level, then absolutely I'm going to pull the trigger. I would love to see, if I could formulate a plan, I would love to see some sort of, ceasefire or peace deal between Russia and Ukraine, and then I think you get a gap up right into that level, and it's a beautiful selling opportunity or shorting opportunity. Okay, so we'll just continue to watch it. Again, there's not much we can do here. Just let the market do its thing. Tremendous bear market rally. And again, I'm still calling it a bear market rally because as of now, especially on the NASDAQ, you got to the point where you were down over 20%, over 10% on the S&P, which again, you get into this point where you have to start classifying it as something different than just a pullback, a run-of-your-mill pullback, especially on the NASDAQ 100 when it got down that much. All right, if we go again to the QQQ, where could this go? Well, it did pause right here, but again, you do have a couple levels coming in, one around 366.65, and then there's a gap fill right here at 368.45. That would be where I start to add to that QID position and probably get more aggressive on shorts. Right now we have some shorts out there, but again, some of them are in the oil area, which I love. Oil did get a bounce today, but overall, I think that Chevron, Exxon, stuff like that is definitely on the good side. Alcoa is kind of classified in that. Obviously, it's not oil, but again, being a commodity. And by the way, was that a good add today or what? Look at that reversal on the chart after adding to my short there at 97.35. It actually went as high as 98.09, but again, look at the reversal closing down in the money for us, almost a full dollar already. In terms of where this is going to go, see this gap fill right here? That's your target near term. I think you get there within a week, and again, that'll be where I look to take profits. So again, looking around $82 to $83 on Alcoa. All right, so again, bottom line is, as we push up, if we push up a little bit more, I'm going to continue to be aggressive on the short side. I'm not buying this rally, folks. I've seen a lot of bullish sentiment out there reemerging, especially, by the way, in Bitcoin, which we'll get to in a little bit, but in the stock market as well. And again, I just look at facts. So number one, the charts are extended. They're coming into more and more resistance points. They're getting more and more exhausted because of the massive move. Number two, the Fed is doing what the Fed is doing, right? If you said don't fight the Fed on the way up when they were cutting rates and printing money, then you can't be like, oh, well, now let's fight the Fed when they're taking it away. You have to say that, okay, well, the likely scenario is a pullback. So again, for me, it's looking at those facts and then just doing the trade. Honestly, weirdly enough, I look at this as one of the easier trades in my career with this massive rally because ultimately, again, it's a don't fight the Fed scenario. All right, and you just go short into these massive moves to the upside and just leg in slowly so you kind of get your average in the right vicinity. All right, going to a couple other charts here. Let's go quickly to Bitcoin's chart. Bitcoin had a good pop in the earlier portion of the day. I did unload my Bitcoin long trade. So again, took about 15 to 16% gain on the Bitcoin trade there in verifiedinvestingcrypto.com. I am now sitting in cash in cryptocurrency. The reason I'm doing that is, well, simply put, you're approaching this upper trend line. It hasn't proven to me that it can break that trend line. So for the time being, I am sitting on the sidelines and actually looking to start to short if we can get a little bit more upside. So it's too risky to hold along right now for me, being so close to resistance where we could reverse at any time. But at the same time, it's not extended enough yet to pull the trigger on the short. So I will, again, continue to monitor. But again, things like Ethereum, and I don't really go over that chart very often with you guys, but this trend line right here would be a just absolute beauty to pull the trigger on in terms of shorting. It's right around 3,300. And again, if we can continue in a straight line, that would get us nice and extended. The longer term chart is still bearish consolidation, just like it is with Bitcoin. This is classic bearish consolidation. Should yield another big move down. This would be your next target down here, going to this 2017 high to this low. And eventually, like I've said to you guys, I do expect sub 20,000 on Bitcoin. Gold. Let's take a look at gold today. So gold today basically had a flattish day. Not a whole lot going on here. Following a couple nice updates. I'm still expecting one more flush to the downside. We've talked about the 1870 to 1845, 40 level. I still think you're heading down there at some point. So I'm just sitting on the sidelines. Again, I have my physical metal. That's fine. That's something that I don't really trade my physical metal. It doesn't make sense to because of the premiums and everything. But again, in terms of GLD or GDX, patiently waiting. No stress. Just let it do its thing and be ready. Same thing with silver, by the way. Silver, basically a flat day today, but still waiting for it to pull back here, and then I'll probably leg into some SLV, probably, I would say. On the oil front, kind of an interesting day on oil today. On the intraday, you had early downside, significant downside, then a major pop to the upside. And again, you could see at one point earlier today, we were trading down as low as below 109, and then you got some kind of rumored news here with a big pop, and then it kind of trailed off to the end of the day. But really, again, reversing down early, then reversing again back to the upside. I'm still overall looking at this and saying, okay, the demand destruction is going to continue to be big as long as oil stays up in this range. Again, as I've explained to you guys before, I have family and friends who are now rethinking trips that they were going to take because of how much the gas tank takes to fill. And then I still think there's a chance at some point we get some sort of relief deal, whether it with Iran or with Venezuela or with someone else out there. I did see the U.S. did sign a deal with Europe for natural gas. So again, starting to kind of shift away from Russia. And as I've explained to you guys, it's not like Russia's not selling its oil, right? Let's be real about this. They're selling their oil, whether it's to China or whether it's to India or whether it's on the black market at a discount, who knows? But it is ultimately getting sold. There's no doubt about that out there. So it's not like, again, it's been taken off the market. This is just the market overreacting, in my opinion. And again, at some point, the market will come to that realization. All right, so again, that's where we stand here on the day. Again, I did pick up TLT today. You guys should not have any question as to why I did that today. Entry at 127.80 on this beautiful flush here. It did trade up nicely. Not quite $1 off the lows yet from our buy, but getting darn close. And this is just a simple, I said I'd show the 10-year yield. Good thing I brought this up so I could go over this. So this is why. Let's take a look. And you can see, look at that line. This is from the weekly chart, but look at this. See that? How awesome is that? Like right there. And again, zoom out and look at that. You basically go back to the crash of 87 when this trend line begins. And again, basically, I'm not going to stand here and say yields are not going to go up in the future at some point, but per the charts, the yield should have a big pullback here. So I'm guessing if I had to go out on a limb, minimally you're going back to 2%. That's kind of my target here. So I think we pull back to 2%, which again, there's a gap fill right there. You see this little pivot high. That would be my estimation, is we're going to pull back to 2%, which in terms of yields, that's a big move. From 2.5 back to 2%. Now, in this day and age with the way yields move, it doesn't seem like a big move, but that is a huge move. And again, I think that's going to be coupled with the market starting to realize that the Fed being so aggressive on raising rates is going to cause the economy to slow down. You add in the inflation side of things, and the inflation side, it's being underestimated in my opinion. We're not just talking oil here. Go look at groceries. Go look at so many things out there. The prices have spiked. Let alone rents and home prices, right? Just throw that into the mix where it's sucking up people's income, disposable income, if they do have any. But again, inflation is a huge, kind of barrier to economic growth and spending from the consumer. All right, by the way, I did read something that is a kind of a red flag. It's not a red flag yet, but I did read that delinquencies on auto loans are now at multi-year highs. So again, that is something to pay attention to. These are signs, by the way, that started to slowly creep up in 2007. It took a while, but it eventually spread to housing. It has spread to other areas, and then that's when you saw the big collapse. And by the way, housing prices are already starting to go lower. I gave you guys this heads up a while back, saying that, again, housing would see a drop. But when you have yields going up like this, and the 30 year is now, you're talking mortgages basically at 5%, which is super high compared to where it was over the last few years. That's going to slow housing down. And then you add in the price of housing going up as much as it has. Yes, there's low inventory, but you are now seeing, in my opinion, stuff is not moving. In fact, new home sales, I believe, were down 25% recently in the latest stats. All right, enough said on that front, guys. I wish you all the best. Have a wonderful, wonderful weekend. I'm pumped for next week because it likely means volatility, which means more profits for us. Let's just keep rocking and rolling. Have a great one. Take care.